Hey everyone, welcome back to Corporate Decoder, the place where we decode the hidden truths in company filings. Today we are diving into Hanmi Financial Corporation's latest report, and let me tell you there are some interesting points to unpack, especially when it comes to their recent financial performance. If you enjoy getting clear, straightforward insights from these often complex documents, make sure you hit that subscribe button and don't forget to join our Discord community, linked in the description below to keep the conversation going. So Hanmi Financial Corporation has just put out their current report for July 22nd, 2025. This form is what companies use to announce big news that could affect their shareholders. The main reason for this filing seems to be about their financial results for the quarter that ended on June 30th, 2025. Think of this as a mid-year checkup on how the company is doing financially. Hanmi Financial put out a press release detailing their financial results for the second quarter of 2025. They also provided a supplemental presentation on their website, but crucially, they've attached both of these to this official filing for us to look at. This means we can get a direct look at the numbers they are sharing with the public. Now, while this is exciting information, it's important to note how they've shared it. The document specifies the information in this section, including the exhibits, shall not be deemed filed for purposes of certain sections of the law. Basically, while they're telling us the results, they are saying this isn't an official filing that makes them legally responsible for its accuracy, in the same way as other parts of regulatory filings. It's like saying, hey, here is our update, but don't hold us strictly liable for every single number in it. It's a common practice, but worth being aware of. Let's talk about what they announced. We're looking at the numbers from the quarter ending June 30th, 2025. Remember, this is often a quiet period for many banks following the first quarter surge, so it's a good indicator of their core performance. We don't have the actual financial tables directly in this document, but we know they are attached as Exhibit 99.1 and 99.2. This means the full details are available in those companion documents. Hanmi Financial stock trades on the Nasdaq Global Select Market under the ticker symbol HFC. Knowing where a company is traded gives us a sense of its visibility and the regulatory standards it adheres to. Nasdaq exchanges are known for having higher listing standards compared to some other exchanges. Now let's get into the risks the company is flagging. This is where companies tell us openly about what could go wrong, and it gives us a great opportunity to understand their vulnerabilities. One of the first risks they mention is a failure to maintain adequate levels of capital and liquidity to support their operations. This is a big one for any financial institution. Adequate capital means they have enough of their own money to absorb unexpected losses, and liquidity means they have enough cash or easily convertible assets to meet their short-term obligations like paying depositors or covering expenses. If a bank doesn't have enough of either, it can face serious trouble. They're also worried about the general economic climate both here and abroad, and specifically mention the possibility of recessionary conditions. This is a pretty standard but very important risk, especially for banks. A recession typically means more people and businesses struggle to repay loans, leading to higher defaults and losses for the bank. Consumer spending and borrowing habits can also change dramatically during tough economic times. The volatility and deterioration in credit and equity markets is another key risk they highlight. When stock markets and bond markets are unstable, it means the value of the bank's investments can go up and down rapidly. This can impact their profitability and their financial health. Interest rates are a huge driver for banks, and Hanmi Financial is acutely aware of this. They mention that inflation and fluctuating interest rates can reduce their profit margins and the yield on their investments. This also affects how much their financial instruments are worth, and even the decisions people make about taking out new loans or paying off old ones faster. The cost of attracting deposits and getting other funding is also tied to interest rates. When rates go up, it's more expensive for banks to borrow money and to keep attracting customer deposits to lend out. Regulatory oversight is a constant for banks, and Hanmi Financial is bracing for potential actions from supervisors and any issues that might come up in their regular checkups or regulatory exams. This suggests they are aware that regulators are watching their performance and compliance closely, and that there might be areas for improvement that could lead to formal action or requirements from regulators. In today's digital world, cybersecurity is paramount, and Hanmi Financial explicitly calls out the risk of failures or breaches in their operational and security systems, including cyber attacks. This means they recognize the threat of hackers or technical failures that could disrupt their services or compromise sensitive customer data. The consequences of such an event can be devastating both financially and in terms of customer trust. Talent is crucial for any company, and Hanmi Financial acknowledges the risk of not being able to attract or keep their key employees. Losing experienced staff, especially in critical roles, can impact operations strategy and overall performance. When they talk about changes in liquidity, they specifically mention the size and composition of their deposit portfolio and the percentage of uninsured deposits. This is a very important point. Uninsured deposits, those above the FDIC insurance limit of $25,000, are more likely to flee a bank during times of stress or perceived weakness. A high percentage of uninsured deposits can make a bank more vulnerable to bank runs. Understanding the mix of their deposits is key to assessing their stability. Governmental regulation is always a factor, and they are concerned about changes in regulations, including potentially higher FDIC insurance premiums. These premiums are what banks pay to insure deposits with the FDIC. If these premiums go up, it adds to a bank's operating costs. Also, any changes in how the Federal Reserve or the Treasury manage monetary policy can ripple through the financial system, affecting interest rates and credit availability. This is a critical point about how the parent company gets money from its bank subsidiary. Hanmi Financial Corporation is the parent company, and Hanmi Bank is its operating bank. The bank's ability to send money up to the parent company is restricted by factors like how much profit the bank makes, its retained earnings, and other financial tests. If the bank can't distribute earnings to the parent, then the parent company might struggle to pay its own expenses, dividends, or make other investments. This cash flow link is vital for the overall health of the Hanmi Financial Corporation structure. They are closely watching their credit quality, which refers to the likelihood that their borrowers will repay their loans. If credit quality deteriorates, meaning more loans are at risk of default, then the bank has to increase its credit loss expense and its allowance for credit losses. This allowance is like a buffer fund they set aside to cover potential loan losses, and it directly impacts their reported profits. Finally, they list their ability to control expenses as a key factor. This is straightforward but essential. Managing costs effectively is crucial for profitability and is something investors always look at. And at the end of all this, we see the signature of Bonita I. Lee, the Chief Executive Officer, on July 22nd, 2025. This confirms that the report has been officially reviewed and submitted on behalf of the company. So to sum it all up, Hanmi Financial Corporation has released its second quarter 2025 results. While we don't have the exact numbers here in this initial scroll, we know they've provided them through press releases and supplemental materials attached to this regulatory filing. The company is clearly focused on managing economic uncertainties, potential regulatory actions, and the ever-present cyber threats. They're also highlighting the crucial interdependency between their bank subsidiary and the parent corporation regarding financial distribution, and the importance of controlling operational expenses. Their risk disclosures paint a picture of an institution navigating a complex financial landscape with a keen eye on capital liquidity and credit quality in credit quality. My take on this is that Hanmi Financial is doing what most banks do in a filing like this, highlighting all the potential problems that could occur. This is standard practice to protect themselves legally. However, what is most interesting here are the specific risks they call out related to deposit liquidity and the ability of their bank subsidiary to send money up to the parent company. These are not minor points. A bank that has a high percentage of uninsured deposits could face a run if confidence wavers, and if the bank subsidiary to send money up to the parent company. These are not minor points. A bank that has a high percentage of uninsured deposits could face a run if confidence wavers, and if the bank subsidiary to send money up to the parent company. These are not minor points. A bank that has a high percentage of uninsured deposits could face a run if confidence wavers, and if the bank subsidiary can't pay the parent, the whole structure is weakened. This is something to watch closely. They are also very attuned to interest rate changes and the broader economic environment, which are major forces impacting banks right now. What's your opinion on these disclosures? Are you more worried or comforted by their risk assessments? Let me know in the comments below. If you found this breakdown helpful, please give it a thumbs up and subscribe for more deep dives into the world of corporate finance. And as always, check out the Discord server linked in the description for more discussion. Thanks for watching, and we'll see you in the next Decode.